China has released some new economic numbers that are being widely interpreted as disappointing for its economic growth prospects. Chinese leaders are in Davos to explain what's going on, and Nicholas Lardy of the Peterson Institute is here with me, Steve Wiseman, to explain to viewers here also what's going on. Nick, what are the new numbers?
Well, the new number, the big number, is that the economy grew at 7.4% in 2014, which is just very slightly below the targeted 7.5% that has gotten so much attention.
Is it a big disappointment in your judgment?
No, I don't think it is. A tenth of a percentage point this way or that way is really not significant, even in the short run. And the underlying numbers in this report are actually fairly positive. China generated a record number of new jobs in 2014, in part because they continued the pattern of economic growth in which the service sector is growing more rapidly than the overall economy. The service sector is more labor intensive. So from a political point of view, when you have very high employment creation, the political leaders are not actually shaking in their boots because they came in a tenth of a percentage point below their nominal target. We also see very strong consumption growth, very strong growth of disposable income, and again, that ties back into the growth of employment and the continued growth of wages. So there are some elements in the report that are actually fairly optimistic, but most of the attention focuses on the headline growth number, and it is down slightly from the target, and it is the slowest growth they've had in quite a few years, but 7.4% is spectacularly good by global standards.
By global standards, anyone would be envious. Is this service and consumption growth aspect that you just mentioned, is that part of the rebalancing that you and others have called for?
Well, it certainly is part of it. They're getting stronger consumption growth. They're moving away from an industrial-led, export-led growth pattern, relying more on domestic consumption demand. There's a long way to go in that rebalancing process, but I think we're beginning to see some of the results of the policies that have been adopted in recent years.
So when the Chinese leaders are making their presentation in Davos this week, that ought to cheer a lot of people who are in attendance, I suppose.
Well, there are still a lot of naysayers out there. They say this is just the first step down. Next year will be even lower, and the year after that will be even lower. So there is some nervousness in the markets about what the growth pattern will be going forward. But I say when you look a little bit behind the headline numbers, there are some significant elements of strength, and if that continues, then I think the downside risk for the economy over the next few years is actually fairly modest, that they should be able to keep growing at 7%, 7.5%. They won't be slipping down to 6% and 5% and 4% as some people are forecasting.
Is there anything worrisome in these numbers, for instance, pardon me, the property value inflation, that asset bubble problem? Is there any indication that those still exist, those problems?
Well, I would say it's a good news story. The main reason the economy is slowing down is that investment in housing has moderated. But that's very much necessary. China's been over-investing in property for quite a number of years, and now we see a few years ago property investment was growing at a 30% pace. Last year it was only growing at 10%. So that's led to less demand for steel, a lot of construction materials, and so forth, so it has very widespread repercussions. But this is a necessary adjustment to get onto a more sustainable growth path, which is not led by an unsustainable growth of the property sector, which, as we've seen in other countries, including our own, can be somewhat problematic.
Right. Thank you very much, Nick.
Thank you, Steve.